Welcome to the video. In this video, we'll talk about Sofi. We'll take a look at the daily and weekly time frame on the charts, see where I'm going to add, where I'm going to trim. We'll talk about my overall valuation. We'll take a look at the options market, what's happening there. We'll look at some Sofi news. In the meantime, my live portfolio results are there. You can copy me over on eToro. Enjoy. All right. Let's take a look at Sofi. We've been loving this one. We had a cheeky little ad recently and a cheeky trim. Well, we trimmed first and then we added back a little bit more than we trimmed. Felt rude not to really. Yes, it is currently trading at roughly very close to fair value. Well, I call it fair value, but when I give these kind of prices, what I'm saying is this is the price I'm willing to pay up to for this one. So for SoFi, that is 28.68 if memory serves me correctly, and price today is 28.14. So very, very close. I did add roughly around kind of the chart 26. That I'm just super excited. I think going forward, the multiple is going to expand, especially as rates come down, and I'm expecting the loan platform business to absolutely bang in the next few quarters. So I'm expecting to be able to lift that fair value up. That said, I am going to have to thin out a little bit on my ads to SoFi unless I trim some more because it's currently just under 10% weighting in my portfolio, and I don't really want this company to be bigger than a 10%, at least not whilst I'm in crypto. Crypto is the majority of where I'm looking for the next quarter. SoFi is a multi-year position for me. I don't plan on getting rid of that for a long time. Tesla, multi-year. UNH, that is a return to the medium play. VG, multi-year. So I'm starting to load up on assets that are multi-year for me, especially as crypto runs its path and we can rotate some of that capital. Fingers crossed. Hopefully we make the right choices there, but time will tell. So looking specifically at SoFi after I've got distracted again, seem to be doing that a lot lately in my videos. We had a banger day yesterday, 6.7%, and it's up pre-market about 0.8. Can't hate that. We are coming up to this sticky confluence area, but I do think we've got a little bit of scope to get at least over 32. But $30 as usual is going to be quite a psychological level. Sorry, I've just realised pre-market we're actually 28.37. Very nice. Chart though, again, what we just mentioned, a lot of confluence coming here, but we also are starting to build this really nice volume shelf. So a real strong area of support is 26.18, and then below that we've got this very nice juicy level at 21.43. Would actually love to get back down to 21.43. I would buy a bunch of stock in that area. Could happen. Price has been quite volatile. The markets are quite tumultuous right now. And the broad market, generally speaking, I think is looking a little bit toppy. So to have a little pullback wouldn't be too much of a shock. Would that affect financials? Not necessarily, at least not to the degree. I think tech's going to get a little bit of a re-rating at some point. So I'm trying to thin out on my tech. You might have noticed I've been really trimming my chip related. So I got rid of MU. I've been trimming AMD a little bit, although not too much because I think that one can pump up. But I did take more off that yesterday. And really, outside of crypto, I'm not super into tech at the minute. I've got a small position in SMCI, but at 2.7% weighting, it's hardly groundbreaking. Mainly that's a play on. It's such a small cap. I think it can do well to the upside as it follows the leaders. But I do think some cooling off in the sector, broadly speaking, and some of the big caps probably going to come down a little bit as well, which will drag the ETFs down. SPY, QQQ, that's type of thing, but I'm not in those ones at the minute. Price got way too extended, not interested. Did start a position in Fortinet, but it's very, very tiny, and I'm waiting for more of a pullback in the broader market. Sitting on a little bit of cash, so again, I don't think that's going to be allocated to SoFi, but certainly any other financials that might come down. Some of it's starting to look real good. But again, a lot of people are saying there's not much opportunity in the market. Beg to differ. I'm finding lots of pockets of opportunity. They're just outside of what people are traditionally looking at. When people say there's not much opportunity in the market, they mean tech's getting overpriced a little bit, which I'm inclined to agree. But there's plenty of sectors in the market right now that are beaten up. Real estate, housing, mortgages, a lot of the smaller financials, healthcare as well. That's probably going to get a bid with the Trump announcement with ACA. So this has been more of a general update than just a SoFi update, but I promise we'll get back to that one. A lot of energy infrastructure is still absolute bargain because the cost to build out makes it look like a not a great investment, but into the future that will bear us tons of fruit. So right now is the time to pivot a portfolio into a little bit more defensive, a little, and find some opportunities that are good value. If the broader market falls, there will be some slide back, but if you're already in a heavily discounted stock, that slide back won't be as impactful, and you also get the opportunity to get a better discount. Um, yeah, I think that's it. Looking at the chart specifically for this one, though, RSI is kind of medium here, so we've got time to pop up. We did have this little trigger of oversold on the MACDX Plus, which did give us a nice little pop on price yesterday. Can't hate that. And flow is turning. So we do have some scope on the daily to pop a little, maybe retest that local high and maybe get a little bit higher. But we're definitely in a channel here. Probably should move this. Now we had that new low. Beautiful. Don't be afraid to move your trend lines because, price is dynamic. Things move and shift, and it gives you new areas to work from. If you just stick with the pattern you drew on months ago, it might not always be right. And I've moved that a little bit too low. I think that's a mistake a lot of people make. They just draw a line on there and leave it for 5 years. That line's going to move. Price doesn't always hit things exactly, but it does create new areas. And look at that. That lines up pretty nicely. Yeah, I do think this is a very bullish pattern. I think Sofi is going to move and become over my fair value for a lot of the next quarter, maybe in the next year, just because that the multiple is going to expand as financials start to have easier access to giving money out in form of loans, and their margins are going to improve. And the tech stack on this one is SoFi has mentioned that it's going to be fruitful in 2026, 2027. So there's some extra numbers we can add to the bottom line, which will enable us to increase our valuations, which we haven't accounted for in the past. And we certainly haven't given it a multiple to reflect that as well. But let's look at the weekly. I feel like I'm covering a lot of ground very quickly here today. So hopefully you guys are keeping up. SoFi loves its patterns, and that normally I would remove a lot of this older noise from the chart, but I left it here just so you can see patterns always get nailed on SoFi. It is textbook and it's glorious, and I love it. It makes it very easy to add and trim around these levels. That said, look at this now. This, to me, looks like a massive cup and handle forming. So as we said, we'd like to see a little bit more downside on this one. For this pattern to start being fulfilled, a little bit of a rejection here can't be hated, because that gives us the potential for a lot more technical upside. A technical upside is different from fundamental upside, but they both work in conjunction together. So for me, I must have both. I'm not just buying a stock just because it fundamentally looks good. I've got to like the technicals on the chart too. Fundamentally, 100% loving SoFi. Technically, 100% loving SoFi. Why would I not have high conviction and give it a large weighting in my portfolio? That's how my mind works. That's how my strategy works. Obviously, there's a lot more into that. I've got to research the company and understand the numbers, what they're doing. But I love this. I don't think I've even put the... I wasn't expecting SoFi to accelerate so quickly this year. Let's put this level on there, though, so you can see kind of what prices we'd be looking at. I'm just going to eyeball this because I don't want to put any more lines really on my chart at the moment. So roughly that gives us a price target 160. Now, that said, something really important to understand here. Just because a pattern exists and you've got a price target on there, it doesn't mean it's going to hit it in 2 days, a week. This price target up here could take several years to hit. That is essential to understand. But if you know that level exists and it respects it going forward, and we validate the pattern, we don't just keep going down, that gives us a really good area to trim at in the future and really take risk off the table. And a lot of the times when you have these really insane price projections from measured moves, and I mean this has been multi-year forming, they tend to be very strong. But we'll see as well as price... Let me get a pen here. Where's a pen? I don't use one very often. price forms these areas. That was really rudimental, but you'll find it builds a pattern around, and then that gets reconfirmed and you get more confluence on patterns going forward, so it becomes a very strong level. Does that make sense? Hopefully it makes sense, or am I just waffling? That was actually a terrible prediction. I don't think that's anywhere near what I think price will do for Sofi. But on the weekly, as you can see as well, we got quite spicy on the RSI. We had a little cool off, but we're still quite hot. Typically, Sofi, if we look back historically, it doesn't go hot a lot, and when it does, it has cooled off aggressively. So that's something to be aware of here. Am I going to trim this one? No, because for me, the fundamentals in this situation are much stronger than the technicals. The technicals are telling me it's a little bit extended, but fundamentally, as we're going into rate cuts and the financial system is easing, that has more weighting in this scenario. Back here, when we got really overbought, absolutely trim a few times, and my position was a lot smaller back then. So I trimmed. And so hopefully this is giving you a little bit more understanding of how I'm interpreting the charts and how I balance technical and macro and fundamental. So I post a lot of charts, but for me, the order is macro first, fundamental second, technicals last. It just so happens that I've already done all my macro research and I kind of know my portfolio structure for the next year or two. So that's already on eToro and in my other portfolios. And I've also done my fundamental research because those positions are now added and I'm building them out in my portfolio. So what you see day to day on eToro is me looking at the technicals, figuring out where I'm going to trim, where I'm going to adjust my positions, and that sort of thing. So that's how I do things. So I thought let's do this video a little bit more in depth than usual. So other than that, Mandic Plus, institutions still look good. We're fading a little bit here, but we'll have a quick look at Fintel as well on this one. Flow looks kind of slow. Let me just pull up Fintel and we'll have a look what the big boys are actually doing on this one, shall we? Fintel, Sofi, Insiders. No, ownership. So if you ever see the chart going down, and your first thought as a new investor is institutions are dumping this one, price is going down. Not necessarily. That isn't how it works. So I don't know if this will come up on my chart here. Sofi institutional uptake is still rising. And it's been rising since June 2023. And that's probably going to line up with the chart in this case because the chart looks so good. June 2023. So roughly about here. So we have uptrended for a long time. I've lost the chart now. I've lost it. Sorry, switching between tabs is a new thing for me. I have absolutely lost it. Oh, there it is. So the chart did come down a little bit. Let me move it off to another page. Oh my god. Also, side notes, I've just noticed Simply Wall Street, they now have changed their valuation stuff. So if you don't want to build models, you can use what other analysts have predicted, which I wouldn't use myself, but they do have an ability on here to make your own price targets and stuff. So I'm just experimenting with that in a minute. If you go here, set fair value, it gives you loads of options. I thought this was really good. So you can change stuff and you can build your own using DCF and various create narratives. How cool is that? Looks way better than an Excel spreadsheet that I use, but we'll see. I'm going to try and migrate a lot of my stuff over there so it's easier to show you guys and we can add a little bit more spice to our streaming sessions. But I love making more work for myself and I'm still upgrading our camper van, so it's going to be slow to come out. Just a heads up on that one, but since it popped up. Let's look at the options market for this one then. No need to pause the video since I already had it open. I think when we did the video last week, the numbers were the same, pretty much. Not much has changed. So we're still, market makers still want to keep it under 30 and above 25, which also lines up with I can never remember which color code that one is. 1 second. Support. Nope. 50-day moving average, which isn't, I wouldn't use that one massively for a lot of support. If I was going to use a moving average, I'd probably use 150 to be honest. We are well extended away from that one. So huge bullish trend here for SoFi. So it's right in the middle where market makers want to keep it. Let's look at the options market though further forward. Let's go 2026. Let me make this a bit easier. So I've got a bunch of people sitting in the money now. We're running out of people that want to take a bet that this is going to go much higher in the near term, so over the next quarter. Not really a surprise. We've had a hell of a run up. Probably see. Well, actually, there's not a lot of people betting to the downside on this one, which is interesting. So they don't want to take the bet that it's going to rise more, but they're also not confident it's going to fall. But let's push that out to a little bit, shall we? Let's go another year out. 2026, January 2027. This still looks pretty good. A lot of bullish interest. There's not a whole lot of downside. We've got a lot of volume here. This is probably hedging. If we have a recession, financials are going to get smashed. So bear that in mind. If you think you're going to get a recession, but I think first a pump, and then if we'll have to see how the macro looks. I do have some concerns with the macro. I'm pretty sure we're going to go through some form of hyperinflation again, just because of all the money printing we're seeing around the world, which is what happened during COVID. I don't think it's going to be to the same degree, but you absolutely want to own hard assets during this phase. Don't go to cash, or you're going to get left behind again. Essentially, what happened in COVID, when governments print money through war or fiscal monetary policy, a lot of it annoyingly gets cycled back round and it lines rich people's pockets, big corporations. And what do they do with it? They buy hard assets. And what happens then? The price of those assets goes up. I mean, that's really a very rudimentary interpretation of it, but that's what happens. And that's why you get this massive growing wealth divide where the rich own more and more and the price gets higher and higher and the poor can't afford that. But I hope that changes in the future personally, but also I don't think it will, so I need to make sure I'm positioned well going for that. January 2028. Still a lot of people looking good on this one. I mean, this is a really far out strike price. So what? That's a couple of years and a bit. And it's very close to hitting that already. I think we could hit back over 30 again, and eventually they'll be in the money. But there's a lot of volume at 40 as well. I think we're probably hitting 40 way before January 2028. At least I hope so. Do we have a measuring tool on here? We do. That would be an extra 40%. I mean, I would say it's going to be growing faster than that, but as long as we can trade the chop, I don't really mind. I just love the company. I love how it's run, and I love the numbers they put out and how well they are able to pivot. Other than that, though, was there anything else I wanted to talk about SoFi? We had the note I put on last week about, was it Upstart delinquencies, and then there was a whole hullabaloo. So initially I came out and just said this won't affect SoFi because they've already confirmed that it isn't the case, and they've shown us that in their slide decks the delinquencies are well within their tolerances, in fact lower than their tolerances. And then lo and behold, the people that wrote the report came out and said that it wasn't an issue, that they'd actually made a mistake, like a really, really big mistake, and this causing millions of dollars to be wiped out of a lot of financial assets. Now, at the very least, that company's lost a lot of credibility. BTIG, I think it was called. Was it called BTIG? Something like that. I'll put it in the news section. In fact, let's just skip to the news section so I can actually see what I'm talking about, because it's on a different page on my slide deck. So it looks like I got it right. It was BTIG, and we talked about it. I just copied that post from Stock Market Nerd last week, saying that SoFi's got a very different clientele to Upstart. They're much riskier clients. Is that what we call them? But again, it's all invalidated. But interesting enough, despite the fact that that announcement caused a massive sell off in a lot of assets, them coming out and saying they made a mistake didn't pump prices back up. So, that's when I bought the dip. That's when I added to things after that news came out. Probably should have added more when they realized when I saw that it was bull crap. Forgive my language. Other than that, though, this is the same news as from last week. Obviously, we've had another read on this Sofi Technologies institutional ownership chart, pretty much gone up a tiny, tiny little bit again. Um, and then price calculations. I haven't updated that with current price because it's just a faff just to keep adding stuff because it's an Excel spreadsheet and then I've got to copy it over. Basically, making excuses for being lazy this week. My calculations currently still the same, just current price is different. So we're actually probably less than 1% away, probably like 0.5%. So I'm right at it. I'm not going to add when we go over. I've got a pretty strict rule not to add when I go over my fair valuation. Again, my fair valuation doesn't always mean what everyone else thinks is fair valuation. Fair valuation for me is the price I'm willing to pay for that asset. Okay, clear? So someone argued that with me before, and they were just basically saying that's not the fair value what I've got. Well, first of all, everyone's fair value is going to be different because they all use different metrics in their models. But specifically for me, that's the price I'm willing to pay. And again, I just want to remind everyone that the model for so far, you can't use a standard DCF because how they use their cash flow. So you have to use it based on EBITDA. Okay. And I think that's it. And I'll see you tomorrow for PayPal. I know, boring for most people, but I'm still bullish. I'm still holding in there. That's a wrap. If you enjoyed this content, feel free to share it with your mom, your nan, your dad, your dog, whoever. And I'll see you next time.